Hey guys, Terry George here, and welcome back to Real Estate Vibes. Today we are talking about how much money you need to begin the process of buying a home. Now, I'm not a lender, I'm a real estate broker, so I'm not going to talk to you about VA loans, conventional loans, FHA loans, any of that stuff. I'm also not going to consider T-Shack, Good Neighbor Next Door, Homes for Heroes, Hometown Heroes, any of the grant programs. We're talking about once you get under contract, how much money do you need out of pocket to get the ball rolling? These are really great questions that come up from my buyers, and I just thought it would be a really great video to put together, because you may have a lender that tells you, oh, I can get you into a house with zero down, and you're like, woohoo, I don't even need any money as long as I can make my house payment, right? Wrong. Here is why. So I'm going to make it short as can be and pretty simple. And then if you guys have any questions or want to put some comments below, you're more than welcome to, but I'll give you the short end and the short scoop version of it. So follow along with me. The first thing that you do, of course, you go home shopping, and of course you have that pre-approval letter, right? Because we don't like to show houses unless you have a pre-approval letter. Okay. All right. So you go under contract. Yay. Your offer has been, well, I can't spell today, clearly. Let me go ahead and erase that. Contract, so you go under contract, yay. And now guess what? You have to put down earnest money. You're like, Terry, what the heck is earnest money? What does that even mean? And I'm like, well, here's the thing. If you were to go lease an apartment, would they just hold it for you for without any funds, without any money before you moved in? Let's say you didn't want to move in for a month. Would they hold it for you, or would they make you put down a deposit? They'd make you put down a deposit, right? So the earnest money is something similar to a deposit for your contract. This money is also what we consider good faith money. Now, I can do a whole another long video on earnest money, on when you get to keep it and when you don't get to keep it and all the rules in a Texas contract. But for just simple, let's just say that the deal goes through and everything is perfect. This earnest money will actually go back to you at closing. It's good faith, kind of like a deposit. So if you have a down payment, it would probably go to your down payment. It might go towards your closing costs, all of the other things that come along. But either way, you're gonna still need earnest money. Now in our market, which I'm in the suburbs of Houston, I can tell you that earnest money can range from anywhere from $500 with a new construction home to 1% of the purchase price. So let's just say you're buying a new construction home, and I'll do it on the cheap end, and they really want, they're gonna give you a great deal because you're a veteran or a nurse or a teacher or something. They're gonna say, hey, we will do a less earnest money. We'll do a less deposit for you. We'll do it at $500 instead of, $4,000 or whatever. So let's just say you need anywhere between, let's do 500 to, let's just say 2,000. And chances are this could be more, but I'm going to play it along for somebody that might be doing a VA loan and not have a lot of money, cash flow. They're just doing the max loan amount because they don't have a lot of cash to put down. You still need this. This is due basically immediately. There's a time is of the essence clause in the contract, and this is due almost immediately. And then you're like, okay, well, that's great, but guess what? There's more. There's another clause in your contract in paragraph number 3 of the Texas real estate form, the 1 through 4 party form, or 1 through 4 single family residence form, that's considered option money. Option money. Now, option money can also be negotiated. Option money gives you the right to do inspections. In other states, such as, I believe, Louisiana and I think California, there's an automatic inspection clause in there. In Texas, of course, because we have to do everything a little bit different, we have an option period clause. That option period gives you the option to back out within X amount of days for whatever cost. At, let's just say $200. So basically I'm saying, hey seller, I will give you, let's say $150 for 10 days. Now, some realtors will say, oh, it's for inspections, but actually if you read it, it's the unrestricted right to back out. But what most people use it for is to get their inspections done and negotiate any repairs if needed. And so now you're out another one, $150. Now this could be $500, this could be 7 days, this could be 10 days, this could be $100. But just for grins, we're gonna go with $150 because I'm gonna do it on the low end. Let's say you have a realtor or it's a lower end property, and so you're not gonna put $500 earnest money down. Option money down. So let's just say 150. Then let's say you get through this and you get through your earnest money, you get through your option money. Oh, and mind you also, as long as the deal goes through, you also get this money that you gave to the seller to say, hey, I want the option to back out in case things don't go well. This will also go either towards your down payment or closing costs, so it does come back to you at the end. But again, this is something that you need up front. This is something that you need within the first couple of days of it going under the contract. Now, the other thing I'm going to tell you is this can't be mattress money, okay? This can't be money that you've stashed under your bed from waiting tables and you just pull it out. It does need to be traceable and certified funds. So it needs to either be a cashier's check or a wire or a regular check out of your checking account. It needs to be sourced funds here because the lender can and have lately been going back and trying to source that earnest money because they want to make sure that your brother-in-law, sister's, uncle's, best friend's cousin didn't give you this money to try to buy the house and then give it back to you at closing and credit it back to you. They want to make sure that your money is getting credited back to you. So you want to make sure there is no mattress money going on anywhere in a real estate transaction. Okay, so we get through earnest money, we get through option money, and you're only a couple days into the contract, and then the lender calls and they said, hey, guess what? It's time to order the appraisal. Most lenders are making you pay for the appraisal up front now. Reason being is if you were to back out afterwards and they paid for that appraisal up front, they're getting burned. They're having to eat the cost. It was costing the lenders a lot of money for people just backing out when the house didn't appraise. The buyers would go peace out, and then the lender was stuck with that appraisal fee. So now the lenders are charging that fee up front. So if the lenders charge that up front, so number 4, we're talking appraisal. And if you don't know, the appraisal is a third-party company or person that comes out and gives the value on the home to make sure that the house is worth what the bank is at least giving you a loan for. And there's a more complicated answer to that, but that's going to be my short answer for this video. Now, if you're buying a house cash, which if you're buying a house cash, you probably don't need to watch this video. But if you were buying a house cash, an appraisal is not required. An option is not even required because if you don't want to do repairs, or you don't want to have your back out option, you don't have to do this. This is required earnest money. Option money is pretty standard here. An appraisal, if you're getting a loan, they're going to make you get an appraisal. And ballpark right now, they're running about $550. Okay, so right now we are up to, and I'll just do easy numbers here. Let's just say that you got a really good deal on a new build and it was $500. The appraisal was $550, and the option period, which on a new build you don't really have an option period. This would be on a resale only. I know my handwriting is getting a little rough, but on a resale only. So let's just say you're talking $5, $10, $11, $1,200 so far. Now, I will go into loans for a minute because if you do need to get a VA loan, they're going to require a termite inspection. Also, I would always recommend getting a termite inspection. And if you do, those will run another 100, 150 bucks, typically about 100. So let's just add $100 to this. So now you're at $1,300. So even if in a perfect world you were getting a loan with 0% down, and you had a program like the T-Shack program where they were giving you a grant or an allowance to help out with your closing costs and or your down payment in both, or the seller helped you with a closing cost, you negotiated that in with the price or something. Hey, I'll give you X amount, but you give me a certain dollar amount to help me out with my closing costs. Even outside of all of that, you still need to have money for your earnest money. You still need to, you know, here's the thing, if you can't afford $150 for an option period, you probably shouldn't be buying a house. You're gonna need an appraisal. And oh my goodness, I missed the big part. If you're going to have an option period, chances are you're going to do inspections, right? Duh. So let's add inspection money to this. And inspections, depending on the size of the house, can run anywhere from $400 and up. If it has a pool, if it's a larger home, I mean, it can go up, you know, quite a bit more. But just for fun, we're gonna say 400. So let's add the 400 to the 1,300. You're now at $1,700 that you need before you even sign the contract on your home. Why do I tell you this? Why is this important? Because you don't want to say, oh yeah, I've got $1,000, I've got $500, we can buy a house, or hey, the lender told me I don't need anything, I'm 0% down. You still have to get yourself under contract, and you need at least this no matter what. Even if you said, I'm not doing inspections, I'm not doing an option period, I don't care about that, you still are going to need money here, and chances are you're still probably going to need your appraisal money there unless you can sweet talk your lender into paying it for you ahead of time. So just kind of a quick overview, lets you know. Again, I had this actually come up with a pre-qualified buyer who we got down to it. They were pre-qualified with a letter, not from one of my lenders, because my lenders verify all kinds of things before we go out home shopping. But we got out there and they didn't even have this money for the earnest money in their account. And if you don't have that earnest money and you can't even write the contract or open up title with that, there's no way that you're going to go get into that house. So anyway, story of today, process all of this. And yeah, so this is about how much you'll need. Actually, you'll probably need more than this, but this is a good starter pack. And this didn't go into super intense details because there's so much more that goes along with earnest money and option money and appraisals and inspections and all of that kind of stuff. We'll do that in another video, but this is basically what you need just to get you in the door to buy a home. So hope you guys have it. If not, start saving for that nest egg. Get your little emergency fund, your nest fund. By the way, your emergency fund should not be going to this. Always have a cushion in your account. You never know. Houses are like cars. They need maintenance. They need work. But hopefully you got something out of this today. And if you want to see other videos or other topics, or if there's something in particular that you guys want to see, just send me an email or comment down below. Hopefully by now you have subscribed and liked and rang the little bell for your notifications so that you can see all of my weekly videos. All right, guys, have a great week. Talk to you soon. Bye.